Hello, and to continue on our real estate education, Real Estate Riches by Professor Dolph Derus. Hi, I'm Maria, and we're on to internal rate of return, or IRR. In the previous video, we talked about yield, which is the simple measure of our property's performance. We also talk about cash and cash return, which accounts the cash that we borrowed to purchase the property. Now, let's say hypothetically, if the rent went up by 50% over the next year, how do we take that into account? This is where IRR, or internal rate of return, comes in. IRR, internal rate of return, accounts for how the cash flow and the property value changes with time. It also accounts for the projected growth in rentals, the capital growth expectation, the mortgage interest payment, as well as the principal that is paid off, and the depreciation each year. In the previous example, we talked about purchasing $100,000 worth of property, and we put in $30,000 down. So we have a mortgage of $70,000. Now, this is $100,000 purchase property. So the net, let's say the net after tax cash flow is $1,000 per year over the 5 years. Then the next 5 years, the value of that property is $150,000. Now, what is our equity? Equity basically is the market value minus the mortgage. So if the market value is $150,000 minus our mortgage of $70,000, because we put in $30,000 down payment, so we have an equity of $80,000. Now, don't forget, we also got $1,000 per year of net cash flow over 5 years. So that would give us $80,000 plus $5,000 is $85,000 worth of equity. Now, internal rate of return looks at the $30,000 down payment that we made when we purchased the property, and the $1,000 per year over the next year of net after-tax cash flow. So therefore, our equity is $85,000. And that's why internal rate of return is important, because internal rate of return takes time, the time value of your money. Now, for every dollar today is worth more than $1 in a year's time. And that's where internal rate of return is very important. So I hope you learned something. Take care and God bless.